Hello, everybody. We're going to be taking a look today at another journal entry. We're going to be looking today at insurance expense, which is going to be a little bit one of the easier ones. So this presentation is copyright accounting professor. That's me, Bennett Tchaikovsky. All rights are reserved. Any redistribution is expressly prohibited without my prior written permission. And opinions expressed herein are those of myself and not my employers, including but not limited to Irvine Valley College or the South Orange County Community College District. So let's get to it. So when I'm coming over here, and let's go ahead and look at this one. So again, we have the same issue over here with our adjusting entries, meaning that when we look at this, do our revenues reflect what we've earned? Do our expenses reflect what we've used? Do our assets reflect our future economic benefit? And do our liabilities reflect our future obligations? And what I did do on the prior examples we looked at is, well, we purchased an insurance policy on 12/31, say 25. The policy will give us coverage from 1/1/26 to 12/31/26. So, and then we're preparing financial statements on 12/31/25. So at this point in time, the prepaid insurance has not been used. Very important. It has not been used. So when we were looking at the other examples, right, it was all done on December 31st. It's a December 31st accounting party. But now we're doing adjusting entries. So this is where we kind of up our game. So coming over here, if I'm looking at the timeline, right? So coming over here. So on 1/1, so let's take a look at what we did here. Basically, I purchased a 2-year insurance policy, and boy, am I an idiot. That will give us coverage from 9/1/25 through 8/30/31/27. That's 2 years. Okay. So now I'm basically buying this policy, right? So instead of buying this on 12/31, I'm now actually buying this on 9/1/25. And over here, I now have an issue because my issue here is that, well, I've used the insurance policy for a period of time. So what I now need to do, because I've used something, I need to go through and record an expense. But before we get there, let's do the easy part first. We bought an insurance policy for $96,000. Well, as we've seen over here, assets equals liabilities plus owner's equity. And so how do I record an asset? I do it with a debit. When I buy an insurance policy, my cash is going down. I'm going to show that decrease with a credit. So my cash is going to go down. This is going to be on 9/1/25. For every credit, I need a debit. My debit is going to be to prepaid insurance. This is an asset on the moment we buy the policy because it is giving us future economic benefit. However, in our case right over here, we now have the issue of, well, prepare the adjusting entry as required on 12/31/25. So now what I need to do is to basically figure out and say, okay, coming over here, right? So how much time have I used the policy for? Well, I used it for September, October, November, and December. So I used it a total of 4 months. So when I look at this policy, though, it's a $96,000 policy, but this policy is unique. It's giving us 2 years of coverage. So it is not in Florida, right? There is probably on a daily basis. This is a 2-year policy for 96 grand, right? California isn't any better. All of our insurers are leaving. So coming over here, purchases a 2-year policy for 96,000. So I come over here and I say, well, it's a 2-year policy. So 1 year is going to be 12 months, year 2, 12 months. So this is going to be a 24-month policy. So if I take 96,000 divided by 24 months, this is going to give me the amount I'm going to be using this policy each month is going to be $4,000, which would be my monthly insurance expense. Okay, so first thing I need to figure out, I buy the policy, right? This is no different than what we were going through and doing before, but now it's funky because I'm not buying it on the end of the year. I'm buying it before the end of the year. So I need to now, I've used this policy for September, October, November, December. So over here, I now have a total amount of, basically I've used it for 4 months. So what is my monthly rate on the policy? Well, this policy covers us for 2 years. 2 years is 24 months or 4,000 per month. So my insurance expense for 2025 is basically going to be 4,000, which is my monthly insurance expense rate, times 4 months, or a total of 16,000. So here I'm going to debit insurance expense for 16,000. Okay. Now, for every debit, I need a credit. Okay. So when I look at my assets, right, I know that this is correct because this is showing my future use. For here, I'm going to credit prepaid insurance. Now, many of you might be saying, well, Bennett, we just watched this video where you were going through and telling us we had to use this crazy contra asset account called accumulated depreciation. And that's absolutely correct because equipment has physical substance. Insurance is just really giving us coverage for a period of time. So for every debit, I need a credit. So I'm going to basically debit insurance expense and I'm going to directly credit the prepaid insurance. And I'm going to show you why momentarily. So over here, I'm crediting insurance expense as of basically as of on 12/31/25. So when I take this and I look at this, it's like, okay, what's the ending balance in my prepaid insurance account? Well, I used up 16,000. So my ending balance is going to be 80,000. And this is where, when we do adjusting journal entries, it's so important that you answer these questions. Do our assets reflect their future economic benefit? Let's find out. So right over here, right, I've credited prepaid insurance and now my balance is 80,000. Is that 80,000 correct? Well, the policy was for 24 months. We've used 4 months, or from 9/1 through 12/31/25. So we have 20 months left. So the value of the prepaid insurance, given that I have 20 months left as of December 31st, 2025, at a rate of 4,000 per month, is going to be 80,000. So this is where we can kind of go through and check our work, right? By going through and making the adjusting journal entry, we can basically check our work to basically make sure that this asset is showing, does it reflect its future economic benefit? Now, it's asking us now, what is the balance of prepaid insurance? Well, let's go through and have some more fun. If I take my prepaid insurance And then I'm going to take my insurance expense right down over here. And if we look at this like this, so what happens at the end of the year? Well, in 2025, insurance expense, like expenses, revenues, and dividends, is going to be closed out to retained earnings. However, the ending balance of an asset becomes the beginning balance of the following period. So my prepaid insurance is going to start with a balance of 80,000. Now, how much insurance did I use in 2026? Well, during 2026, there were 12 months. My rate is at 4,000 per month. So my insurance expense for 2026 is going to be 48,000. Let's do this thing over here. I debit insurance expense for 48,000. I'm going to credit prepaid insurance for 48,000. Did we do this correctly? Well, the ending balance as of 12/31/26 is going to be $32,000. Is that right? Well, the policy had 24 months, right? I used 4 months in 2025, or 9/1 through 12/31/25. I used 12 months in 2026, or from 1/1/26 to 12/31/26. So over here, I have 8 months left. If I have 8 months remaining as of, if I have 8 months remaining and the rate is 4,000 per month, $32,000. So two things always have to be correct. The amount of the expense you record has to reflect what was used, while over here, the ending balance of my prepaid insurance needs to reflect our future economic benefit, right? So do my assets reflect their future economic benefit? Now, another thing that you could also be asking, well, hey, Bennett, when I look at this over here, I see that, yeah, like when I'm looking at this prepaid insurance, if I would have had to put it on a balance sheet, part of it's current, part of it is non-current. What do you do? Well, in technical terms, on my exam, you can list it all as a current asset, but technically, we would have to go through and split up the policy amount as other current and other non-current assets or prepaid insurance accordingly. So that's what we would have to go through and do if we were preparing this for a company. In my exams, I'm usually more concerned. There's so much information on exam two. It's by far one of the hardest tests for my class, just because it's a lot of information. You have to know about how to do, if you didn't do well on exam one, it's bad. But you can always turn it around, always make things better. That's what we try to do. But in any event, thank you for joining me here today. That was our discussion of prepaid insurance, and I look forward to seeing you on the next video. Have a great day.